Moving on, then we will now be joined by our guest Dharmesh Shah, who's the head technicals of ICICI Director, to weigh in on how the market is really shaping up. Hi, good afternoon, Dharmesh. Thank you so much for taking the time out. Dharmesh, today is another day of weakness. In fact, today is the weekly expiry, FNO expiry for Nifty, and we do see that Nifty had slipped today below its key support level of 25,800 as well. Do you see some bit of a short-term correction on the anvil? What are the levels to watch out on Nifty and Nifty Bank as well?
So good afternoon, Ankita. Yes, definitely. I think so. We are seeing a weakness for last two trading sessions where the Nifty seems to be breaching the 26,000 level, and post that we have seen a more of a panic type of a situation in the market where the mid caps and the small caps are also seeing a selling price. But going forward, we believe I think so. It's more for structural bull market corrections where corrections are always a part and partials, and we expect Nifty to find a strong support in this range of 25,500 to 25,700, and it should look as a buying opportunity because overall, if you look at the large caps, I think so constituents of Nifty 50, this seems to be more promising. If you look from the weekly perspective, 37 stocks still forming higher top, higher bottom formation. So no change in the structure. Yes, definitely mid caps, small caps, where we are definitely seeing a selling pressure. That pain can continue for some couple of days. But eventually, we believe I think so. The way that today we see the bounce back happening from the 50-day exponential moving average, expecting I think so Nifty to back to 26,000 to 26,100 in the coming days. So it's more of a consolidation going on in this range of 26,300 to 25,700 is likely to be a trading range for next couple of weeks. And at the same time, Bank Nifty again I think so the relative in relative terms it's clearly outperforming the Nifty. We believe I think so 58,000 to 57,900 remains to be the very strong support for the Bank Nifty, and eventually I think so Bank Nifty should look for a target of around 59,500 to 59,800. So overall, I think so maybe this week we will see a lots of volatility because you have Fed event, there's US India tariff war talks going on in the market from 10 to 12. I think so that is something where whatever positive outcomes comes, that could lead to some bit of a recovery to the market. But we're not negative for the market. Maybe I think so in the short term it's a pain, but it's a good buying opportunity, I would say.
Okay, so that's the view coming in on the Nifty and Bank Nifty. Mr. Shah, afternoon, Ashesha, this side. Any stock specific ideas which you can share with our viewers this afternoon?
Absolutely, I think so. The way the market seems to be forming, I think so. It looks like more towards the large caps. I think so. It's large caps looks more safer at the current market price, and where we believe, I think so. Capital goods as a sector which is not in limelight for the long time should be in action as we are nearing towards the budget by January. I think so. The budget action should start picking up from January, and where we believe I think so L&T remains to be a top pick. Now, if you look at the capital goods as a sector, the sector is corrected 35 to 40% from the top, and post that I think so we see it's more sustaining about the 20-week EMA. So L&T again particular remains to be a top pick where the 14 months of long consolidation breakout was witnessed, and the current fall seems to be retesting the previous breakout level which was around 3900. So we believe I think so the 3900 3800 remains to be the very strong support for the L&T which expect to hold, and eventually I think so L&T should be look for a target of around 4500. So L&T remains to be a top pick at the current market price.
All right, so L&T is your top pick. It continues to remain your top pick. Dharmesh, on that note, thank you so much for joining us today. But with that, it's time for a quick breather. Don't go anywhere. After the break, we'll keep getting you more updates on the other side. Stay tuned.